Hello everybody, my name is John Mulqueen. I'm from CBRE Global Investors. For those of you who don't know us, we're an investment fund management business, part of the CBRE group. We have about 30 billion of assets under management across EMEA, of which around 6 billion is in the office market. And my role there at the moment is to provide some sector expertise across all the portfolios for all the investors, and to input into our strategies looking forward over the next 10 years.
Okay, great. Mardi.
Hi, good afternoon, everyone. Mahdi Mokrane. I head the strategy and research group at LaSalle Investment Management, based in London, with a team of 10. LaSalle Investment Management, that's about 60 billion globally, about 22 billion here in Europe, of which more than half is actually offices across the whole region. And my role is really to guide investment strategy, look at long-term trends, and help underwrite acquisitions and manage portfolios with our fund managers.
Great. Adrian.
Adrian Karczewicz, good afternoon. I represent Skanska Commercial Development Europe. And according to Richard, your magazine, we are the biggest office development company in Europe. Thank you for this recognition.
That is correct, yes. I can confirm that.
I ran transactions for Skanska. So basically, all of the office buildings which we produce in Central Europe, Poland, Czech Republic, Romania, Hungary, are being divested. I'm responsible for sourcing investors.
Okay, great. And James, just briefly.
Yeah, I'm James Welsh with Invest Aberdeen. We are a joint initiative between the two local authorities in the northeast of Scotland, looking to support inward investors coming in and promote the story around Aberdeen, the investment that's happening, and generally all the good things that are happening in Scotland at the moment.
Okay, good. Just coming to you, John. In terms of how you're seeing the market, let's take EXPO last year as a point. So in the last 12 months, what changes have you seen? Obviously, office has always been a very dominant sector, but what are you seeing at the moment, particularly since you're looking at pan-European across EMEA?
Yeah, okay. I guess over the last 12 months, we've continued to have the issues around Brexit, but not just Brexit. There's been many things going on in the world which have made people more cautious. Lots of discussion about being a late cycle. I think we're all a bit bored of hearing that phrase now. We feel we're long cycle. And for me, we've seen, as a result of that, very limited supply from developers. So development is very, very limited because everybody is very cautious about being caught out 2 or 3 years down the track when occupier demand dries up. So I think as a result of that, we're seeing very constrained markets, particularly in the dominant capital cities across Europe.
Okay, good. We had a session yesterday actually on the London market, and that picked up that point actually about very limited construction during that time. Just picking up with you, Mardi, and picking up a little bit on what Marc said in the presentation. How much? I mean, we've all been through, or some of us who are as old as me have been through various times when broadband was supposed to bring the end of office, and everybody was going to work from their home or from the beach or wherever it might be. But that doesn't seem to have happened. But let's look at some of those future trends in terms of occupiers. You're on the research side. So what are you seeing in terms of that, and how are you, I guess, how's that influencing your investment strategy?
Well, if you look at, I think it was mentioned by Marc in terms of, what do the new occupiers want and what are they trying to do? They stayed very quiet just after the GFC. If you remember, not that long ago, everyone was talking about cost control, rationalization of space. That wasn't that long ago. And then suddenly, we're out of the crisis and things are actually feeling better and have accelerated. And I think most of the market participants have been surprised at how fast occupiers have begun taking those decisions of picking up space, and even now in situations where there are bidding processes for space. And some of the tight market that we just mentioned a minute ago. And that's, for example, Munich is such a situation. We saw that in London in 2015, and then the market calmed down again. So I think we have to be conscious that, these ebbs and flows of supposedly long-term trends, actually have wobbles in them. So what we're looking at for us is really location and amenities. We put a very, very strong emphasis on amenities. We don't necessarily want to bring everything in the building, because it's not always possible and it's often very costly. However, we're very, very conscious about, put a lot of emphasis about what's going on and what's happening around the building. And there are examples of edges of CBDs which actually prefer to to full CBDs. And that's where we've taken our say, supposedly our bets in developing or refurbishing assets in and around Europe.
Okay, and that's interesting. And Adrian, you're obviously in a way developing the product that investors are then going to buy and that there's going to be for occupiers. So in some senses, you've got to be ahead of these trends. So what are you looking at when you're seeing the future of offices? Are there particular things that you're building in now when you're thinking about developments that maybe you weren't even a year ago?
Sure, I think I can share what just Mahdi said and also Marc, that right now we have to take care of one very important factor, and this is labor. So all of our, I would say, buildings are becoming, very much suitable to meet the demand from especially millennials. Yes, you use this word like blurry things. Yes, so we have actually started in 2009 the blurry thing, which was LEED. Everybody was thinking, oh, it's something blurry. And Skanska is coming with some strange criteria to bring to Central Europe or to Northern Europe. Of course, right now it's a standard. If there is no LEED certification, the building cannot be sold. Yes, so this is first thing. Now, I think we have to meet this well-being of the person. So we are introducing WELL standard to our buildings. First one in Warsaw, second one in Prague. And this is about basically the comfort of the person who is using the office space sometimes for a longer time, spending longer hours. So this is about air, quality of water, quality of light. It's about healthy food in the building. It's about the comfort, the fitness, which has to be provided. So all of that has to be taken into account. And if you are offering, of course, you can again attract the talent. So your HR or Philips, Toyota HR departments can attract workers and can be actually successful in running the business.
Okay, good. I'm going to come to you in a second, James, on this, but Marc, just let me know in terms of exactly what Adrian's been talking about there, in terms of millennials and what they're looking for. How important is that in terms of not just the building itself, but also the location, and by that I mean the city or the country that it's in? How much is the city playing a role there?
It's playing a more and more important role as other things in life are sort of rated less important. For example, the typical German idea, if you're getting 18, is to have a car. This is, with the new generation, not their most important thing. So they like to be somewhere which is a vibrant city, there's lots of activity, they want to have a nice working environment. So these things are changing. But I think is still important. I mean, the millennials and the new generations, they are in our focus. They are vocal, they're on social media, they're everywhere. But we must not forget there is lots of generations still at work who are not like them. So the challenge for every employer is to make sure he's having something for everybody in, because you can't lose the older generations, because they have experience, they know lots of things that the you guys on the block don't know. So you need to find that balance. But overall, yes, the city, the environment, the neighborhoods are getting much more important, and especially for those industries and jobs where talent is scarce. It's not the things that will likely be replaced in 10 years' time by technology, but it's all the things where you still need people and brains and creativity, and that's where you need to provide more than just a dry and safe office space.
And I like the generous use of the word older rather than old, Marc. I appreciate that, definitely.
Experience.
So, James, we've heard there that it's about attracting talent, it's about livability, it's about location. In terms of the cities, how easy is that to make those changes? Because actually, these are changes that have happened in a relatively short space of time. And cities tend to operate on a much longer term. So how possible is it for you as a city to be able to react to those things? And what are you doing to make it easier for developers and investors to be able to actually work with you in the cities that you're in?
Yeah, so I guess with Aberdeen, up to about 2013, we were still largely predominated by single users, large office space, pre-lets, HQs, related to the energy industry. And since then, we've seen a big change to more city centre driven office space. The city council itself has led on that by developing its own, or redeveloping a site within the city centre for office space. And that's looking at ground floor retail, leisure opportunities, and essentially changing that model. People didn't want to be out in a business park. They want to be in amongst the cultural heart of the city. Access the train station, access the bus network, good fibre broadband. So we've seen that change, and to support that, the city has led. So we provided that case study. They have put their investment into that to drive the office market back into the city centre. We've seen occupiers come in and move back into the city centre. So on the back of that, other development has come forward. And it's been a relatively quick process in Aberdeen. You know, in the last 5 years, we've seen such a huge shift from out of town into town, and the quality of the space changing. Smaller office footprints going up in height, multiple users, multiple occupiers, ground floor retail, mixed-use development. So from a city perspective, we've tried to provide a framework from a planning perspective and permitting to try and make that easier, looking at business rates within the city centre, supporting through the legislative framework that we have. And it's been relatively successful to date. 2018, we've started to see office occupation growth in the region. So I think it's a trend that we've responded to and have done so relatively quickly, perhaps more quickly than people would expect from a local government perspective.
Okay, good. John, you're obviously tracking some of the trends you've got to be in terms of looking at sustainable returns over a long period of time. What are the key things for you when you're looking at a location or you're looking at a project? Are you looking for this kind of healthy well-being side to it? Are you looking for urban or edge of the city? What are the key things for you?
I think a lot of what's been discussed here about intensification, I heard it on some of the other panels as well, about urbanisation, the big cities getting bigger and people using space more intensively. And I think to the theme of the topic today, what's going to change over the next 10 years is I think there's going to be a real pressure to use the space that is already available in a much more intensive way. And I think technology is going to play a big part in that. So I think one of the things that's changed over the last 10 years is what's in your pocket. And I'm not talking about money, I'm talking about your mobile phone. If you think over the last 10 years how much that's changed our lives, linking that with the efficient supply of services in a building, knowing which spaces are used and how often, what needs to be cleaned and heated, that all of that is, I think, is very interesting looking forward. So somebody recently was talking to me about how you take that to the next level, actually, where you can maybe monitor your best performers in a building, and you can say, okay, how does that person spend their time? What time do they arrive? What time do they leave? Do they take a lunch break? Who's their network? Who are they spending time with? And I think those kinds of things are really interesting. And I think if you're going to spend that kind of money on raising the quality of a building, you're best able to do that in the very high value areas, which are the dominant cities.
Okay, good. Marty, just pick that up because I think that's interesting what John's saying there about how in future people will be working and what that means then. I mean, we've got WeWork, which has been an extension, I suppose, of the Regis kind of concept, flexible working, but it's completely changed. And if you look at London especially, it's become massively dominant in a very short space of time. But I'm increasingly hearing, as well as people celebrating the fact that it's a different and interesting way, that actually some lawyers or banking who are within those complexes are actually saying, but actually this doesn't fit for us. So where do you see that future? Do you think there's going to be two types of office, or really it's going to be just following what each occupier is actually looking for?
Richard, many questions in what you just said, so I'll try and give you a sort of an investor's perspective. So as we all know, offices, particularly in Europe, play a major role in institutional investors' portfolios. particularly so as we are seeing some wobbles and some difficulties in the retail sector. So from where I stand, we know we'll put more offices in our portfolios, particularly those that are diversified. So that's the first thing. We're all trying to put more logistics and alternative asset classes, absolutely fine. So that's something that is here to stay, and that's a massive trend. The other thing is, today, there is still this tension between occupiers that actually want the maximum flexibility, and WeWork is offering that flexibility at the bottom end to their own clients and their ecosystem, and then they're contracting a lease with a landlord, right? But the thing is for us is, what's the credit worthiness, of course? How long and how sustainable is that? What happens in a downturn? There are a whole host of questions that any institutional investor has to address and price appropriately. And we're talking about WeWork, but there are thousands of flex office operators around Europe, and they're thriving. And there's one created every day if you really look into the detail. So as landlords, we're going to have to accept that flexibility. So what we have to do is work with developers, as we refurb our buildings, to bring that flexibility inside the building. And then I go back to the thing about amenities, the location. Think of tracking your occupiers. I think a lot of the meetings happen outside the building in a cafe or in a restaurant. That's also part of the value add that is being brought in and around by a building. So being able to track that and accept that flexibility is clearly something we have to live with and deal with. But it always brings back to the location. So the winner takes all is probably what we're going to see in some of the key locations around Europe, and we know that.
Okay, good. And Adrian, you're obviously developing, as well as in large parts of Europe, but you're based in CE and also developing quite a lot in that region. What are you seeing there, and what's that playing into in terms of where you see the future of the locations that you're looking at and the types of buildings that you're building that you expect to be, good buildings for the next 10 years and going on?
So basically we are present in 3 clusters. It's Northern Europe, Central Eastern Europe, and United States. So in terms of, I would say, my territory, which is consisting of 7 Polish cities and Bucharest, Budapest, and Budapest, the trend is that, of course, maybe it's boring, but Marcus, you just mentioned that. Location, but now talent location. Yeah? So, of course, to somehow develop our buildings, we have to have office, we have to have tenants, and the tenants have to have people. So actually the attractiveness of the location is connected with many different things, and we see the trend that, for example, Warsaw is being recognized as a 5th most sought after location for outsourcing when it comes to people to select where they would like to work and live. So there are some interesting trends, and of course we are preparing for that. But besides the war for talent, I think another factor is, of course, the cost, which you have mentioned. Yeah? So we are also looking at some new technologies which we want to implement into our buildings to bring the energy down or to zero. So one of the recent initiatives, we have created a joint venture with IKEA to provide perovskites, which is a solar cell system to basically, which will be implemented into facade to in some ways deliver the energy from the sun. So this is something which we are right now pursuing in, let's say, our different analysis, but slowly we'll be implementing this into our building. So it's about, of course, the talent, but then it's about also the cost, which Mahdi has mentioned. So we are looking at these different trends and, of course, in some ways trying to accommodate to that.
Let me just give an example. We're currently refurbishing and actually expanding a building in the city of London. So traditionally that building would have been a 1980s, very banking, trade floor type of office. But what we're doing now is actually bringing that flexibility in the building where some of the floors will actually be very, high co-working space, flex space, and then you'll have more traditional office in there. The beauty of this is that we think part of that flex space and more modern way of accessing a building will actually be beneficial for all the tenants in the building. We'll have more shared places, and that's something we have to accept. We don't know if that's going to be sustainable long term, but clearly we have to bring that flexibility inside our developments.
Can I just add to that? I think that again links back into the intensification point, because one of the reasons why I imagine you're doing that is because if you provide that additional flexible space, the occupier who's signing for a long lease doesn't have to provide a conference room, they don't have to provide a lot of areas that they can just take when they need them. And I think that is definitely a theme that we're seeing more and more across Europe.
We have actually invested in outsourcing platform, the co-working platform, which is called Business Link in Poland. We're expanding this right now to Czech Republic. So we see this exactly what you said, that some tenants require some flexibility. So if you want to bring, I don't know, ABB, they like to have some flexibility, and in the way that you have some co-working space, they can use it in first way to develop in the future. So this is a very important factor, and of course we also take this into account.
Okay, and Marc, just picking up with you, because of the flexible workspace that you've got, there seems to now be a bit, from my perspective, rather like shopping centres in a way, that you're beginning to have to curate the space to put the right companies in with the right companies, and so it's becoming much more of an asset management side, and I guess also the property management side of it, as more technology comes into play, becomes an increasing part of it. How much of that is demand-led, and how much are you seeing in the office sector?
I think it's at the very beginning at the moment. There are obviously technology providers who enter the space offering sort of communities for a building or maybe for a neighborhood. So it's rather the new technologies entering. I haven't seen any property manager really entering that space, creating communities. That's, from my perspective at the moment, focus of the co-working providers. And if we look at them, they clearly go beyond that one flex floor. So they offer solutions on a whole building or even on a whole corporate portfolio. So that goes far beyond that additional flexibility. What will really be absorbed by occupiers in the future is hard to say. What we foresee is that depending on the type of business, the flex space requirement will be between 5 and 30% of their total portfolio. And that's sort of what, from an investor perspective, I would plan forward, that sort of with every sort of square meter you're leasing of fixed office space, there will be a demand between 5 to 30% somewhere in your building or in your environment where you can have that additional flexibility element.
Okay, good. Yep.
Yeah, just to echo this. I mean, there's been, not everyone is a winner in these trends. And if you just take the example of London, I mean, those small office assets, actually not that bad, located, actually are being in straight head-on competition with that flex space. So we've seen many companies actually move out, or that would have probably taken that space, sort of medium-sized, 500 to 1,000 square meter, floor plates, and actually move into flex space. Is that trend going to continue? I'm not sure. I mean, those millennials today working in very cool space, as they grow older, they may want a different space in the future. And, we have to be flexible to offer that. So stay tuned. This is definitely going to change.
Okay, they may get old and grumpy like me. That may happen to them. Who knows? I've got 2 millennials at home, which I can tell you makes you old and grumpy. That's all I can say. James, just coming to you, in terms of what you're looking for a city, are you looking for investors to come into mixed use? Are you looking for them to develop brownfield sites versus city centre sites? What is it that you're looking for? What are you trying to, I guess, direct investors to? How do you want to help them develop the city?
Yeah, so opportunity for a shameless plug here that Scottish Cities Alliance have a fantastic pitch book that we've just launched, which has a whole array of development opportunities, investment opportunities right across Scotland, focusing on the 7 cities. So there, if you pass your details to Dominique at the front here, waving, we can make sure you get a copy of that, and it's worth a look through, because I think that probably showcases how space is changing and the different opportunities that there are. Certainly when we're looking at city centre space, it does tend to be brownfield redevelopment of existing buildings, perhaps old retail space, change of use type things. And there's opportunity for developers to come in there for shared equity, and particularly where the council has led on things, they've gone to the bond market in some instances to raise capital to deliver investment and create a credit rating for themselves, something that's new in Scotland certainly. But also looking at institutional investors to come in, take on buildings and assets and develop those longer term. So a whole mix of opportunities. But for more information, please have a look at the pitch book.
Okay, I'm gonna move on to the last question that I've got here, which is about investment. You've already told us that we should all invest in Scotland. I can see that, so that's good. Let's looking at, I guess, the future. So, there's a lot of investment. Everybody here really is looking at a longer term investment strategy generally anyway. So just in terms of what you're seeing and what you're expecting in the future, what does that lead you to believe in terms of, let's say, hard term investments, whether that's a location or whether it's an asset type, whether it's in a city? What's your sense? We'll start with you, Marc, and we'll finish with you. Great. Marc.
Okay, it's definitely an inner city location. It's a good and flexible building in one of the major European cities. Might be the second league of cities, which are sometimes more attractive for investors than sort of the prime ones. I mean, everybody's in London, but maybe go to Stockholm or whatever. And sort of make sure that sort of your building is sort of long-term proof. I had a very nice conversation with a guy he's working lots of industrial properties, and if you look at factories from the 80s, I mean, some of them are still in use. I mean, how many of the modern office buildings of the 70s are still in use? So, I mean, there is sort of the possibility to create something very long-term. They might not produce cars anymore, but they have offices there, or creative people there. So think about what's flexible to be persistent over the next 100 years.
Okay, good. Adrian.
So Richard, if I can hold the property for a longer time and I don't have to sell, I would actually, having of course experience in Central Europe, I would select an office building in Bucharest, in the city center, with a long-term lease to some AAA IT company. So that would be my bet, because of course when you compare the yields in Western Europe, which are 3% plus in Paris, major German cities. So when you compare it with Bucharest, the prime yield for Class A office building is 7%. So we can see the potential to basically increase your IRR. So I would of course recommend that. Having good financing conditions, I think you can get some good returns in the long term.
Okay, good. Mahdi.
Well, we already have a pretty big office portfolio, and when we look back at the performance, when we look back at what we would like to add and what we did recently, you mentioned 3% yesterday. We were talking about a recent transaction we did in London, and that was essentially a 4.25% yield. On the basis maybe of that Brexit uncertainty. So we're getting that sort of extra yield play in what we call permanent locations. And as you know, we also have an index. This is the EREGI index, the European Regional Growth Index, that actually ranks cities in Europe every year. It's been going on for 19 years, always been a good guide of where demand is going to be. It actually leads you to go back to the usual suspects, maybe not Bucharest yet, but it's climbing in the index. It's coming, maybe, yeah. And so we've taken development risk and construction risk in Paris about 3 years ago. We stopped about a year ago, and we're developing that new generation of buildings. In Germany, we'll probably do a bit more core plus value add today, given the yields. But we've been investing in Prague, and I think we'd probably want to continue on that trend as opposed to change radically our strategy.
Okay, great, John.
So if I'm a long-term holder, I'm thinking about an office building which is very efficient, probably big floor plates, capable of being very intensively occupied, so being able to get people in there at 1 to 10 per square metre. And in terms of location, I've got two thoughts about that. One is, I think if you're looking for rental growth, across the whole piece actually, you want to be in a very globally connected city, so somewhere that's open for business, is already investing in technology, so places like Amsterdam, Paris, Madrid, London, etc., where you have very, very good global internet connectivity. And then in terms of, if you just stand back and look at it like a traditional investor about yield and rents, I would say for yield at the moment, I think London is oversold and undervalued, because if you're looking at, you can buy very good quality buildings there at around 5% core, whereas we're paying down to sub 3% for continental Europe. And in Europe, I'd be looking for the areas where you can get strong rental growth, and that would probably be, again, places like Madrid, Berlin, some of those very ambitious cities that are growing fast and are open to business.
Okay, great. Thank you very much.